Thank you, Anthony. Great to be here. Thanks to you and the Northern Miner team for putting on another first-class event here in a first-class city. It's always great to come here. As Anthony was saying, I am the founder of the Aall Group and the Orecap. And the names are very similar, so I'm going to just describe them a little bit. The Aall Group is a private company. It is, I'm the sole shareholder in it, and it's generally represents the brand, the group that we've built over the last 10 years, which has been acquiring assets in the troughs of the market, generally speaking. We all know how cyclical this industry is, and that's basically our philosophy, is to buy assets when nobody cares, and nobody cares right now. So that's part of our philosophy. One of our exploration companies that we have is called Orecap. It's one of the 7 within our group, so we have 7 publicly traded companies. I'll run you through them. But we recently changed Orecap from an exploration company into an investment issuer. And what that means is we're not going to put a single dollar into the ground into our own projects. What we're going to do is we're going to take that money and we're going to acquire assets and incubate them. So we like to buy good assets, put good young leaders in charge of them, make sure they're well financed, move them forward and set them free. And Orecap, generally speaking, will hold an interest in that company and or potentially dividend out shares in the spincos that it creates, as it has done a number of times through its iteration. These are our group of companies. We've got Mangle Energy, Basload, Mangle River Resources, QC Copper, and of course Orecap. The 7th one that's not there is one of the first deals we did out of Orecap. It's called Aall Resources, and I'll run you through it. But that's generally the structure. But again, Orecap is a little bit different in the sense that we don't put money in the ground. We're counter-cyclical. We're special situations, and we've done 2 deals as Orecap. Now, I put this up there as a little tongue-in-cheek, but that's kind of how I feel where we are. It's the death of the juniors, but do not fear. The juniors never really die. They just sort of keep quiet and stop spending their money. But what it does present is opportunities. I'd say about 95% of the juniors out there are having a real hell of a time trying to raise money, and that's the opportunity. And that's where we've executed on 2 transactions recently. Whereas we don't give these opportunities when people are looking for money. We don't give them money for drill programs, but we look to their secondary or tertiary assets to acquire, or we acquire their debt and we do things different ways. But nonetheless, this to me just speaks to the opportunity in the junior resource sector to take advantage of the dearth of capital that's going on right now. And then when we do acquire, again, we do spin-offs. We've done spin-offs out of Orecap, including QC Copper, and American Eagle, and each of those companies, in fact, done spin-offs themselves. So as you can see, over the last 10 years, we've really had an eclectic mix of generating opportunities, focused on good quality projects, good people who run them, and make sure they're well financed. The other style of investments we've done is activism. Activism we define as changing management, recapitalizing. We did that when we took over Mangle River Resources. We replaced the board. We did that when we did our first investment as Orecap just recently, about 6 months ago, into Aall, where we didn't replace the board, but we inserted ourselves in the board and removed C-level management, took 20% of the company and partnered with Newmont. One of our most successful spin-offs out of Orecap is American Eagle Gold. Tony Moreau is here today. Actually, he's going to be speaking later this afternoon. Tony's over there. You can see our base cost from Orecap's perspective was 5 cents. So we spun that company off at 5 cents. We dividended out 50% of the shares directly to Orecap shareholders. Since then, the company has made a discovery. Keep your eye on drill results coming out the next week or so. There's more good stuff coming. But effectively, they've been drilling nearly 1 kilometer drill holes at anywhere from 0.3 to 0.5 at surface in the middle of British Columbia. Teck just recently came in on 2 different occasions to bring their interest up to 20%. American Eagles hit a high of about 35 cents, so from a base of 5 cents up to 35 cents. That's the types of returns that Orecap we seek. Because it is a risky business, we need those types of returns to justify the capital. Another example is Mangle. I mentioned them before. You can see our base cost there is 3.5 cents. We're flat right now, okay? So but we rode it up to 30 cents and all the way back down. That's, that's part of the 95% that's struggling right now, but this company actually has an awful lot of value. It's got a $60 million exploration agreement with Agnico Eagle to develop its properties, and it owns a basket of other projects that it's acquired since we took it over, including a drill program that we're scheduled to start later in November in the Thunder Bay area of Ontario. And Orecap owns about 20% of that. Basload Energy is an example. Another success. James Sykes was here earlier. James spoke on behalf of Mangle Energy, which is one of our companies. But Basload has really been a big success. It was spun off from a spinoff, which we spun off QC Copper. The base cost there was 8 cents. We took Basload up to $1.20. It's come back down just like most things, but Basload has nearly $20 million in cash in the bank and is currently drilling away a discovery that James and his team made grassroots, high-grade uranium near surface in Saskatchewan. It's a standout asset and a good example of the types of return that Orecap looks to achieve. Our first spin-off that we did is a company called QC Copper. I'm the CEO of this company. I think this, statistically speaking, is our asset that's most likely to become a mine because we have so much information on it. We have 800,000 meters of meters drilled historically and modern. About a year and a half ago, we put out a maiden resource of 2 billion pounds of copper pit constrained in the middle of Quebec. Since then, we raised a ton of money. We drilled 60,000 meters, and we're expected to put our updated 43-101 out later in November. And I think that's going to get hopefully bigger and certainly better in terms of qualitative. It's a very exciting deposit, and that whole district is open. But again, I will reference our base cost for Orecap, 4 cents. QC Copper went up to 35 cents. Again, like everything, it's come back down, but we're still up 300-400% on our cost basis. Last, I don't know if it's last, but certainly, actually, it's the second most recent deal we did, again, was Aall. It's a bit of a departure for us. Usually, I like to stick into Canada because that's where we know the laws, the customs, the First Nations, and have a general good understanding of the geology. But Aall was a unique situation where we were approached by the board, or introduced to the board, and they were having a hard time raising money. We were looking to deploy capital based on an updated plan. So we went in there, we inserted our team on the board, promoted one of the CEO to CEO, COO to CEO, and we had a new plan. And then we partnered with Newmont, who came in with a $20 million U.S. joint venture. They're a 10% shareholder, and we're off drilling on a new IOCG district in Côte d'Ivoire. It's a very exciting project. Again, our cost base there is 12 cents. We're up modestly, but we expect that to grow. The market cap's quite low, and it's got a lot of upside potential. And this is our most recent transaction. We haven't even closed it yet, but we announced it last week. Orecap just acquired the largest copper resource in Ontario. It's called the Thierry Mine. It's in Pickle Lake, Northern Ontario. Pickle Lake itself is a district that I have interest in consolidating. That's sort of part of our mantras, is bigger is usually better in this industry. We acquired it quite uniquely. The vendor, I referenced debt, that this particular vendor owed money. And it was coming due at the end of September, and he couldn't raise a penny. And so we stepped in, we worked with the lender, we worked with the vendor, and we struck a deal, and we bought this asset, which again is the largest copper resource in in Ontario, for pennies on the dollar, literally. So that's the sort of opportunity that exists with that transaction. That gave us, our group collectively, we control 2 out of the 3 largest copper resources in Eastern Canada. There's certainly a lot of value in consolidating, and maybe one day we'll have all 3. I wouldn't mind doing that. I'm a big believer in copper. But I guess this is, again, we bought that at a cost of about cash, $1.25 million. We gained control of that. So those are the types of opportunities that are available to us as a result of this extended and prolonged and severe downturn in the industry. It's terrible from an issuer perspective to see all your share prices like this. However, that's the opportunity if you want to acquire new assets. And that's what I've done for the past 10 years in Orr Group, and that's what we're doing now in a public company format in Orecap. The final thing you need, we always say people, property, and capital, and I think people is is right at the top of that list. But before I talk about people, I'll talk about the fact that we've been able to raise $120 million over the last 2.5 or so years between our portfolio of companies. So that's a lot of cash. Each of our companies is very well financed, which again allows us to go out there and be creative and be aggressive on certain transactions. In addition to that, we have about $150 million in joint venture partnerships that we've done with groups like Teck, Agnico Eagle, and Newmont. So it's about access to capital. If you can't pay for these projects or you can't pay your good people, you're going nowhere fast, and our group has demonstrated the ability to raise capital. And then people, I'll emphasize people. You know, Anthony was nice to give YMP a few plugs, and we appreciate that, but I was also instrumental in taking YMP, which is the Young Mining Professionals, which was an idea, and taking it to 6 continents, and now it's evolved into a global networking group for young people in this industry. And now we even have a scholarship where we give away nearly $250,000 a year to students studying geology in Canada. And I raised that because it's been such an important part of our business plan. It wasn't necessarily meant or designed that way, but it's evolved that way. And it's been instrumental in giving us entree to companies like Teck, Agnico, Newmont. These are all sponsors of our company. So it's given us access upwards. But more importantly than that, it's given us access to really good people. And there's a huge people problem in this industry, and I would suggest that half of my team at Org Group and Orecap, just half of my team, I have sourced directly from young mine professionals. Tony back there, who works very closely on YMP, met him through YMP. James Sykes, who was here this morning, again, same thing. Our CFO, Joel, met him through YMP. So it's really been this eclectic business model, and we come at things from very different ways. We've got deep bench strength, but we have a very long-term, patient approach to creating value, investing our own money, and putting ourselves in front of the wave that's coming, because we're going to be popular again in the mining and metals industry. It may take longer than you and I both hope, but it's coming. And when it does, our collective group are going to own an awful lot of good quality assets in the best jurisdictions, best jurisdiction in the world, which is Canada. So with that, I thank you for your time. Take a look at Orecap, and if you have any questions, I'm easy to find. My email's on the website.